Yes, morena koutou, and thank you very much for that wonderful introduction. And wow, the last session I found really inspiring, as I'm sure many of you did. So we're going to try and make this one just as inspiring and uplifting for you as the previous speaker. And I have a very esteemed panel to do that with me. So just briefly introducing, I'll start at the end, Lynn McMorran, who is the Executive Director of the Financial Services Federation. Then we have Emma Saunders, who is the Chief Executive of Good Shepherd, and Kris Faafoi, the Chief Executive of the Insurance Council of New Zealand, but of course he'll also be known to many of you as a former Minister of Commerce and Consumer Affairs. So we're going to have some individual questions in a minute, but first of all I'm going to start with a general question. For each of the speakers, what's one thing that you see across the industry that perhaps others aren't? And do you want to start first, Lynn, on that one?
Happy to. Thank you, Susan. What's one thing that we see that others don't? I think it's this particular panel is all about resilience, and I think that there are a lot of households at the moment that are not feeling terribly resilient. I think it's going to be a tough winter for some households. But I think one of the things that perhaps a lot of people don't see is the work behind the scenes so I represent responsible non-bank lenders, so my members are not banks, they're the non-bank lenders. There's a lot of work going on behind the scenes between us and the financial mentor sector, particularly through FinCap, and the Access to Justice group. And I think the sooner that we can start conversations for people who have debt that are finding it difficult and that they're struggling with, the sooner we can get them to a financial mentor service to help them to work through a budget, to work through a program, to become potentially the conduit to the lender so that the customer themselves doesn't have to try and deal with all that paperwork and bureaucracy and all the rest of it. You can find a pathway forward that hopefully will get people through, because I think the next few months are going to be tough.
Thanks, Lynn. And how about you, Emma? What are you seeing out there?
I'm not sure that this is going to be news to anybody, but one of the things that always is highlighted to me in the work that we do is the huge impact that family violence has on the economic situation, or the harm that it does within a family, let alone within communities, but to the person who is experiencing that violence. And the work that is needed at the system level, at the intervention level across communities to help in that area is really significant. And I think one thing that I learned yesterday, which is fairly hot off the press from a researcher that I've been working with, listening to a little bit lately, is one particular form of family violence, which is financial and economic abuse within family violence. Anytime that's at play, the mental well-being associated with that is almost double the impact of other forms of violence where financial and economic abuse isn't at play. So it's a really important problem.
Thanks, Emma. And Kris?
Along the same theme, I think cost of living pressures, everything else that's going on in the world, the work of the insurance sector continues, but we are seeing, and it's been addressed at another recent conference, the levels of stress and anxiety that you get as a result. Cost pressure is one thing. We've also had a couple of large events in the last 15 months which cause anxiety. So the levels of anxiety, aggression from the public is something that is becoming more real. And what I, in the short time I've been in this role, find it heartening that it's something that is recognised by the sector, and also tried to make sure that we are shepherding consumers through some of those difficult times, because it is extremely stressful.
Thank you. And I guess I would echo from a dispute resolution service point of view what the other panellists have said. We're certainly seeing complaints driven by people who are under extreme financial stress, which in turn leads to mental stress and sometimes challenging behaviours. But also one of the reasons I'm so pleased we're here today talking about financial capability is that many of the complaints we see are really driven by people's, I guess, lack of understanding of things money. And you think if they just had some help, either in the form of a financial mentor or some financial advice, this could so easily have been prevented. So what can we look at by way of some innovative solutions to the problems that we're all seeing out there? And Lynn, perhaps I'll start with you again. I know you're working with your members to improve customer resilience in many ways, and perhaps you could tell us about that, please.
Thanks, Susan. Look, it's an incredibly tough question, because I think, if you've got a situation, Mr McCorber and David Copperfield put it really well in terms of, if your income exceeds your expenditure, that equals happiness. If it's the other way around, it equals misery. And, how do you manufacture more income in a household when you're on a limited income? I think... as I say, the communication thing is the absolute key as far as dealing with situations early, and if financial mentors can help to start those conversations as early as possible with the lenders, there's often a way forward. There's often not a way forward if it's left and interest compounds and all of that sort of thing. But I think, in terms of innovation, one of the things that we as a group, the Financial Services Federation, did was take part in a hui a few years ago, and Kris, I think you actually opened it for us, around alternative solutions for households. And one of the inspiring things that came out of that was the social vehicle lending program. Now, it's never really got off the ground to the extent or the scale that I would have liked to have seen. I would have loved to have seen low-income households being able to access safer vehicles with lower emissions. That there was a program wrapped around it for maintenance and registration and insurance and all of that sort of thing, so that there was not that pressure on the household to meet the debt to buy a motor vehicle, to pay for a vehicle, but also it took away the pressure in terms of what happens in a household if that vehicle breaks down. Because I think most of you in this room would know that a lot of the time when people feel their budget becomes really under stressed, it's because of that vehicle. Because let's face it, our public transport system is pretty crap. And it doesn't matter where you live in New Zealand, even in some of our biggest cities, you cannot rely necessarily on public transport to get you and your family to the places that they need to be. So you need a vehicle. Most families can't survive in New Zealand without one. So this was a way in which we could put those wraparound breakdown services, mechanical, regular servicing, all of that sort of thing, and a reliable, accessible vehicle for families. Now, one of the things that I'm really proud of is that it has taken off to a certain extent. There was a pilot scheme in South Auckland, and a few families felt the benefit of being able to access a vehicle. Unfortunately, it's very difficult to do without sort of financial support underneath it. One of our members is Turner's Automotive Group. And they are now working with Christians Against Poverty to help some of their families, the families that they're helping, into a subscription type social vehicle leasing model, and take it wider than just South Auckland but across the country. So I'm particularly proud of that work.
Thanks very much, Lynn. And Emma, I think that you've also partnered recently with a large insurer to help those that may typically be excluded from the car insurance market.
Yeah, we have. It's and it's sort of following on from that. Just as I'm sitting here listening to this, though, and thinking about the panel and the work that we've done, over the conference over the last 24 hours, innovation's such a big word, isn't it? Like, there's big capital I innovation, and there's very lowercase innovation of just like doing it a bit better every day. And I think both of those things, or both ends of that spectrum and everything in between, are super important. And I think that also for people who, I think about the big system stuff that is required. And, resilience really is built brick by brick, isn't it? It's the dinner time conversations, and it's the being able to have a great pay conversation with your manager to take you to the next step, and having some privilege that you can build on, etc. But it's also dismantled brick by brick, isn't it? In all the same ways that we've talked about not having dinner time conversations, not being able to pay for a tyre that gets blown out, not being able to then get to work and then losing a shift, which then makes you lose your money. So that brick by brick approach to innovation, I think, is really important, and the big scale eye and the little scale eye as well, I think. So forgive me my tangent, but it was just occurring to me as I was sitting here listening. One of the examples, following on from the importance of a car, actually, and getting to where you need to get to. One of the tools that we bring to clients in our work is a no-interest loan, and oftentimes no-interest loan for a car so that you can, get to your job, get kids to school, get to kapahaka, get to whatever is important to you, and be part of society. And what we found was that people often, when they bought a car, insurance wasn't something that they would necessarily think they needed, that they could afford, that there was some con in there, that it was, just throwing away money and not getting anything from it. So this was actually before my time. I'm quite new into the organisation, but it's a super great product, and a good example of, I think, design and being able to say, okay, for people who have lower value cars, so for us at the moment we're limited to under a car for 5k, but really recognising that that's a moment where we can talk to a client about insurance, and the great people in the Good Shepherd team works together with the great people at Vero, Suncorp, to create a product that is fully comprehensive, is low cost. There's no access, no claim, no excess on your first claim, thank you, and that we loan them the annual fee at no interest, and they just pay back $8 a week, and it's enabling them to have a different thought process about insurance, to be able to say, actually, yeah, I will get insurance for my car that's very accessible, it's fit for purpose, and I don't feel like I'm being conned.
Fantastic. And is that product growing? Are more people accessing that? Do you know, Emma?
Yeah, a challenge that we've got at the moment is that 5k car cap, because one of the things that we're really passionate about is that the car, it doesn't, it's a good quality car that doesn't break down the next week and cause the next set of problems. So we want it to be a safe car, a reliable car. There's only so much you can do with 5k. So we're actually working with our insurance partners, Suncorp, at the moment, to see if we can raise that level to another type of car. The other really cool thing that they've let us do with this is that anybody who is any licensed driver who's driving the car will be covered, which is pretty important for the whānau.
Fantastic. And Kris, moving on to obviously pressures facing the insurance industry, particularly due to climate issues. And in fact, I read some OECD research earlier this morning that said that at 5% of Kiwi homes are at high risk of flooding in the next 5 years or so. And obviously we've heard stories about people having to choose whether or not to keep their insurance, or whether perhaps they might be able to afford to insure their house but not their contents, or get third-party motor vehicle insurance instead of full insurance. So what is the industry seeing and doing to help people through these tough times?
In the short term, around the affordability problem, like the Reserve Bank also put some stats out last week to kind of show the trend of what happens after an event. Usually is a spike in premiums post an event. We saw it in Christchurch and Kaikoura, and we're seeing it happen now with Auckland Anniversary Weekend and Gabrielle as well. So I think openly talking about that, and I was in the media earlier this week and late last week saying, this is what we're seeing. The reinsurers who sell us our insurance look at us when something like this happens, and they recalibrate. And we hope that, touching wood, if we have a relatively event-free period, then things will even out. So it's just sending that message out. It's not an innovation, but I think communication and language is also important. Ringing your insurer is quite a daunting task if you don't do it on a regular basis. And one of the things I want to make sure as the incoming chief executive is just making sure people do it. If they are worried about their affordability, then shop around. All our members like new business. And also, if you get your settings right and you can shift your settings, you might be able to find something that's more suitable for you and your budget. But it is daunting. I'm in the sharing mood today, but I had an insurance claim about 2 weeks ago, and I found it quite daunting going through the process. So I think just not assuming that everyone in this room thinks it's okay to ring an insurer and go through the process, and just walking them and talking them through that, I think, is really important. Start at step 1, don't go straight to step 3, and I've had, experienced tax lawyers and community advocates in my very short time say there's something wrong with the language we're using, and I think there's something in that. So I think communication and language to make sure that people understand that. In the long term, there's challenges on the horizon. The weather events are going to become more frequent, and they're going to become more extreme. So we need to find, as a country, a way to reduce and protect our communities for that in order for insurance to stay affordable. And that's one of the big challenges the sector has and that the country has going forward.
So I think we all know that we're all facing those issues, Kris. And so how do you see us all working together? I mean, is there a role for government, do you think? Is there a role for the wider community, for local authorities? What do we need to be looking at in the future
to
build that resilience?
I want to keep it relatively accessible. So there are things we can do in our planning decisions to make sure that we are building houses to minimise risk. You said 5% prone to flooding. Keeping that risk as low as possible. So councils being given good guidance about if there is new development, we need more housing, putting them in places where there is low risk so they aren't going to be flooded. And if we've got communities already that are prone to risk, what can we do to reduce that at a community level with investment in infrastructure? And if we are sending those signals long term to the likes of the reinsurers, they'll keep insuring New Zealand. They'll keep the capacity so we all have the ability to insure, and at an affordable rate. I think in the long term, if we are not doing that and the frequency and severity increases and we see more events like we've seen in the last 15 months, then the cost of that to people who we buy our reinsurance off in the future and their ability to reinsure us will start getting harder.
Thank you. And apart from obviously the insurance issues, which I think we all know about, what else do we think we're needing to face in the next 5 to 10 years? Something perhaps that we're not even seeing at the moment. And how do we build resilience to help us cope with what might be coming in the future? I'll throw that open to any of the panellists.
I'll give it a go, Susan. Look, if I could predict the future, would I be sitting here? I'd be retired by now. I think it's what's going to happen for the next year or two is going to be really, really tough. I don't think any of us can get away from the fact that the cost of living issues are going to be ongoing. The effect of those on some families is going to continue to resonate from some time to come. I think, the work that's being done at Hui like this for over the last couple of days around what do we need to do to lift people's financial capability. And it's not just their financial capability, but the work that our previous speaker, Fala, was just talking about upskilling people so that they can get better paying jobs, that kind of thing. That, those are the things that lift people out of poverty. You can't manufacture more money for people if the money doesn't exist, but you can help people to get skills so that they can get better paid jobs. And that's sort of and then know how to manage their money, know how to budget well, and the work that all of you people do in terms of helping people to do that is just remarkable. So I think more of the same, more of us collaborating and conferences and situations like this where we talk to each other, where we do develop those relationships. What can we do to help? Because unless you talk to each other, you don't know what people are doing and what people can do to help, and that is the way to shift the dial.
Yeah, I'd totoko that, and I think as well, I'm a big fan of the the two big areas of design around and service provision around designing those big systems, the big levers, the big regulatory responses and policies that we can do, like when we put in the compulsory KiwiSaver. We introduced KiwiSaver and compulsory contributions and an opt-in rather than an opt-out, and opt-out rather than an opt-in. Those sorts of big design changes are really, really important. The system nudges that our speaker this morning talked about, and then the fantastic people-centred, individual or whānau, community-centred services that are delivered that aren't about a particular product line or anything. You know, fella that spoke before, that's about the person in front of us, what our community needs right now, and it's a combination of things. It's getting the kids to school and then getting the mums into trades and then getting and I think the work that the financial mentors do is a really fantastic example of that, being really the people-centred stuff. So I like a combination of both of those things.
Yes, well, that probably leads in neatly to one of the questions here, which is how can the free resources and services of financial mentors be promoted to those who really need it, especially with lack of funding and individual branding? So before I throw that open to the panel, I would just like to echo what we've been talking about over the last 2 days, which is even more fundamental than that, I think. How do we get people, New Zealanders, Kiwis, talking about money and making it okay to talk about money? And does there need to be some sort of public campaign, just as we've had perhaps with mental health issues, that it's okay to talk about your mental health, that it's okay to talk about money? And I think it really starts with families, with whānau, having those conversations around the dinner table after school, and also, of course, schools as well. But anyway, financial mentors also have a vital part to play in encouraging people to talk about money and getting their money problems sorted. So how do we promote those who really need it?
I've got something to say. I'll go after you.
No, you go. You've probably got something more constructive
Not
than me.
at all. I actually just get really nervous about that statement, because I think there's already heaps of pressure on the services, the financial mentors. I don't think demand is the problem. I think supply and uplifting the supply is more of the problem. I know for us, we absolutely can't open the doors to everybody that we want to right now and publicise our services as widely as we need to, because we haven't got the capacity to fulfil the demand. So I do get I get it that we want to make sure that people who are struggling know that there is support there, but far out, we're just going to put our workforces under a whole lot of pressure. And I think as long as we're, I actually think when I talk to people in this room about who they're seeing who they need to see. I'd just like that service to be more available. So I get a bit nervous about that because I'm trying to supply the service, and that makes me nervous. Yeah.
Kris, I think
Chris, that wasn't very constructive.
No, it's more to your comment, Susan, and I think it's just supporting what has already been done. And I think just harking back to the session yesterday when we had the podcasters on, which I thought was enlightening. Peter Courts had a presentation today. We know in the short term, those who are going to be hurt the most by the cost of living issues. And I think making sure that we've got the right voices going to the right audience, saying it's okay to talk about money, that everyone's feeling the same way, is really important. So I think credit to the Commission for recognising that, having some public servant up at the front isn't necessarily the best communicator for that. The guys who are speaking to those communities who have actually got their own issues themselves that they've been through are doing it. So again, it's that language and messenger thing that I think can be quite useful in the short term. But there are bigger levers that have to be dealt with to deal with the other structural things that should change too.
There was a question up here before, but it's disappeared, also about how we can simplify things like loan agreements and insurance contracts, and obviously the great work that the Commission has done on the glossary, I think was a fantastic initiative. Be great if more people started to use it and knew about it. I'm certainly a huge proponent for using plain language, which can be challenging in legal documents, but there are ways to do it, and I know that the Insurance Council is also looking at ways of plain languaging insurance contracts.
Yeah, and credit to Minister Bailey. He introduced a bill last week to update all the insurance legislation, which has been well overdue. One of the key factors in that is, again, using simple language, not just in the contracts, but in the way that we communicate to consumers as well. Again, it comes back to, if you're talking over each other's heads, someone, of course, is going to walk away without understanding what exactly they're covered for. So, the proof will be in the pudding. We've got to get the legislation through, and we'll grind through the operational side of that. But again, I hope that's a good innovation for the consumers that's come about from the change of legislation from the government.
And that may well make those conversations around money easier, because possibly a lot of people don't like talking about it at the moment, not just because it's deeply personal, but because they might be worried that they're going to look silly if they don't understand, some of the technical terms that we use. Lynn, did you want to add anything to that around how we get these conversations started?
Well, we are. As I say, we're developing our relationships. We've had a long-standing relationship with FinCap. We've had an MOU in place with them for years. But I think what we're doing at the moment is having more constructive and more regular conversations with FinCap, with the Access to Justice group. And where there are issues, if there are issues with a particular member of ours, we're facilitating conversations. I love the way Andrew Mitchell from Salvation Army describes us as the matchmaker between the mentor sector and the lender, to just constructively and respectfully talk about what could be done better, to try and head it off at the pass so that people don't need to access the services as much because of unmanageable debt. But what could be done better about the way in which your terms and conditions are explained? What could be done better with your loan agreement? What could be done better with your affordability assessment process, etc., etc.? What can we do about ensuring that there's a direct line in from the mentor sector to the lender so that they get answers for their customers immediately? So we're doing a lot of work in the background on that at the moment, and I would say that if mentors are having difficulty getting in contact with the right person who can make decisions in one of our member organisations, talk to me, and we'll sort it for you. It'll be sorted tomorrow.
A question popped up just before regarding capacity for financial mentor services, and whether there was an opportunity there to use perhaps more innovative ways of connecting with clients through use of online tools. Emma, would you want to comment on that?
Yeah, I mean, we're not a financial mentor organisation, so I'm reluctant to speak on behalf, but I really love the theme that's come through this conference, and I know is often in our workforce and our industry around collaboration and working together to deliver the services that we need. So we're seeking at the moment, we're undertaking some work to get closer to the financial mentors when it comes to they understand what their clients need. They've built that amazing relationship. How can we use our tools kind of through them without them having to say, go and see those guys now to get a loan or to get help with economic harm or to get XYZ to get some insurance. We can help by using technology as an enabler, but also just using relationships to help us stand alongside the financial mentors. So I think that collaboration piece is really important.
Thanks, Emma. There's a few questions coming through about changes to the Triple CFA and whether it will cause irresponsible lending. I guess all I would say at this stage is that we're still going to have responsible lending obligations in Aotearoa. Those fundamental obligations aren't changing. It's some of the regulations around them. So the question is, will the changes cause more irresponsible lending? I would sincerely hope not, but obviously there are remedies available if a lender is found to be lending irresponsibly. I
guess I'm also happy to pick up on that one too, Susan. I think we have been advocating as a group for less prescriptive affordability regulations because, unfortunately, in some cases it's had the opposite effect to what was intended, which is that people who need access to credit cannot get it because they don't tick all the boxes. And the prescriptive nature of the regulations did take away some of the judgment and discretion that lenders had around, I can see that this person really needs help. and we should be able to help them, but they just don't tick all the boxes. So yes, we've advocated for a loosening up of that. What I would say is that I do not expect that from the time that those changes come into force, where Andrew Bailey has said that he will be revoking the regulations. We're also at the moment working on the Responsible Lending Code to provide more guidance to lenders around, the principle of not lending to people if it will put them into substantial hardship still exists. So the guidance for lenders in the Responsible Lending Code, which lenders take extremely seriously and treat as basically gospel, that guidance needs to be there around, I think, from my perspective and from our members' perspective, more help for lenders to recognise who might be a vulnerable consumer, who is a person who needs you to spend more time with them to make the right assessment in terms of the affordability of that loan. And I don't think for a second that it's going to open up the floodgates, from our members' perspective at least anyway, to irresponsible lending, because it's not in their interests either.
It's not, but your lenders, as you said before, are they're the responsible lenders, and lenders come in all shapes and sizes. I think it's going to take some very, very skillful policy design to open up requirements and make it easier to lend, whilst also not causing some more harm through lending. So I'm looking forward to that very careful and slow and steady, very skillful policy design to make sure that doesn't happen, because I'm worried. I'm worried at what that might say. I agree that then some people who would otherwise have been turned down from, say, a tier 1 lender might find themselves in trouble. Those people might be better off and might be saved from harm. But I think the people who are experiencing the most vulnerability, I worry. And I think if we're going to loosen up those, sorry to use the tired old analogy, but loosen up the guardrails at the top of the cliff, we'd better make sure that there are paths, careful paths behind the cliff edge, and some really good support at the bottom.
Okay, thank you. There's a good question here where there's from someone, there's a lot of talk about need for financial literacy, but Vishal's talk with audience members highlighted the need for financial therapy. Is this a consideration? Anybody want to take that one?
I'm wondering if financial mentors think they do that a lot in their day. Anyway, it's the coaching, the resetting of minds. I know there are a lot of coaches here in the audience today who help people shift their mental models around money and rewrite those scripts for themselves. There's also some really great stuff happening online. Does anyone here follow the Hidden Figures on Insta? So good. They're so good at rewiring what good wealth means and how to get there, and intergenerational wealth from to our Māori point of view. Fully recommend them.
Yeah, I would just echo that. One thing that I think we should be doing more of, and I'm not sure how, I think we need to be telling more of the good news stories. We focus very much, obviously, on the bad news stories and people suffering, and the media love it when they get a good, juicy story. But there are so many good news stories out there of people who have really turned their lives around, perhaps with the help of a financial mentor, but with the help of some kind of advisor or mentor, and are now on the road to financial capability and financial wealth. So that's a challenge, I think, as to how we get those stories told, because they really can be quite inspiring, I think, and then encourage other people to come forward for help and to discuss their money issues as well. Any other comments on financial therapy?
Only to the earlier point I made is that I think our members are certainly, when they're seeing heightened levels of anxiety, are trying to make sure that they can get people into a state where they can have a good conversation about the issue that's in front of them, because there's a lot of emotion tied up before you can get there. So that's certainly something that they're taking seriously.
Okay, well, the clock keeps changing time, but I think we're more or less out of time. Any sort of closing comments that any of the panellists would like to make?
from my perspective, just keep up the good work as a sector and keep up these conversations. They're really valuable. It's a shame that, the Retirement Commission and the fantastic work that they do, we can only have these conversations once every couple of years. But, in the meantime, don't let it go.
Yeah, I'd echo that, and I'd say, I really recognise that certainly everybody here, I think, in this room is doing the best that they can with what they've got for the client or the problem in front of them, and I think that's always to be respected and uplifted. And part of the question comes for the people who don't choose to engage in this way, because maybe they're at a different, they think about lending in a different way, how we can get them into being some of the good guys too.
Look, our board has given us 3 priorities around the bread and butter work that we do in the regulatory space, but the other 2 priorities are long-term resilience and affordability. So you can expect to hear the council talking about that, and so all these kinds of forums help us get feedback and also talk to you about the context of where we are in terms of premiums. So I know they're unanswered questions, but talking is good, explaining what the situation is with the premiums is good, and also we want to have the long-term conversation about resilience to keep us safe and to have insurance affordable in the future.
Yeah, and I would just echo that really. Just keep sharing the good news stories, keep connecting with your community, because it's going to be so much easier to do things in the future if we're working as a community rather than each in our own little silos. So with that comment, I'd like to thank very much the panellists, Lynn McMorran, Emma Saunders and Kris Faafoi, and thank you all for your interest today.